Contributor, welcome back. Good to see you.
Good to be here,
What's up
Scott.
with this today. We said there are two massive events this week. Nvidia was the first one we had to get through. You checked the box. I mean, that was a win.
Sure did.
Stock doesn't look so great today. Market doesn't really look that great today as we now turn our attention towards Jackson Hole. But what do you make of this market?
Well, you told us last week when you returned, you said it was a sell the rips market, and that's what it is. It's sell the rip. We're still, unfortunately, in that state. We're up against very strong historical seasonals. The weakness prevails, and the bond market took over as the catalyst from Nvidia. There was nothing wrong with Nvidia.
Obviously.
It reaffirmed the potential optimism in terms of being able to come out of the earnings recession surrounding generative AI, but it's about bond yields. It's bond yields here and now. And going into tomorrow's Jackson Hole speech, boy, Chairman Powell has to really walk a fine line because he could send the bond market parabolic.
So you say, let's take this on a couple levels. Number one, you're suggesting that the profile of this market has changed. What was a buy the dip market is now a sell the rip market. Number one.
Correct.
Since you say nothing
1st.
wrong with Nvidia. Maybe
Yep.
the only thing wrong with Nvidia is that it's up 200% year to date and up 50% in 3 months going into the print. So there's a lot of momentum and froth, perhaps, and a lot of great feeling already in the story there. What do you make of that?
Listen, Nvidia right now has the most intense positive momentum of a stock that I can remember in recent memory. In addition to that, it has fundamental tailwinds. If you want to try and understand what the actual risks are surrounding Nvidia, it's that you could see market cap loss from a lot of the other mega caps. So if I actually look right now at Apple relative to Nvidia, what has a stronger fundamental tailwind? Without question, Nvidia does. Nvidia has a fundamental tailwind that a lot of the mega caps don't. So I think portfolio managers are going to be, and they're already underweight Apple and some of the other mega caps just because of where they are in valuation. But I do think you're going to see a little bit of an internal rotation amongst the Magnificent Seven going towards Nvidia at the expense of the other mega caps.
So if institutions and mutual funds, hedge funds are underweight some of these names, as you know, yesterday we had Eric Woodring on from Morgan Stanley, suggested that Apple's underowned in that cohort. And then we learned today from another firm that says a lot of the mega caps underowned in terms of that cohort. Does that lead to a chase? After you get some of this settled out, does that lead to a chase, which gives these stocks that next leg after you consolidate for a little bit?
I believe it does, but I don't think we see that until later in the fall. I think in the fourth quarter, we set up perfectly for a chase for performance driven by the positioning, the sizing of the positioning in a lot of those mega caps. But I don't think that's going to happen in the next several weeks.
Okay, so hold your thought for a second. Let's bring in Leesman. Steve Leesman, our senior economics reporter. He's out in Jackson Hole, obviously. He is there because of that big speech tomorrow. So, Steve, give me your take here. Joe just said that the chair tomorrow needs to walk a, quote, fine line, or he could send the bond market parabolic. What's your sense of the kind of message that Chair Powell wants to deliver tomorrow morning?
Yeah, Scott, can I go back and talk to you another thing that Joe said, which is I thought it was really interesting that the bond market looks to be sort of trumping the Nvidia earnings here, which means the market is really way more concerned about what bonds are doing than it seems to be these unbelievable earnings from at least a single company anyway. And that kind of gets me to my answer to your question. I do think Powell has to walk a fine line. I don't know that I can say that or the bond market will go parabolic, but I think he's going to walk a fine line because I think there's a fine line to walk. It's one where the Federal Reserve has to still have concern about inflation, but had a bunch of success in bringing inflation down. Inflation was 5 percentage points higher this time last year, Scott, and we've gotten to this point with, unchanged unemployment. GDP is running pretty strong. That's the big question to me as to whether he feels he needs to address that stronger inflation, stronger GDP growth. Remember last year he said that bringing down inflation would require a period of below trend growth. He never got that, but he did get inflation coming down. I don't know how much concern there is for that. We had Harker tell us today that higher rates at this point was not a concern for him. And he thought, you know what, in some case, it could help bring down inflation. So I don't think we're that on edge on monetary policy here, because I think the Fed is definitely in a wait-and-see attitude. I don't know what the market heard this morning from Harker that made it go feel sour about the world.
Well, I mean, Harker said, quote, right now I think that we've probably done enough. I guess my question to you is Harker on an island? Is he on an island, or is he part of the majority at this point?
I don't think so. Look, there's if you want to put together a majority, the majority would be those who think they've done enough or those who think you got to go another quarter. That's a big part of the committee right there. There is a contingent out there that does think maybe there's one more to go, but they're going to let it ride, I think, a little bit, Scott. I think a pass in September is probably a done deal or real close to a done deal without any obvious acceleration of inflation. And then you've got a few more months of data where the Fed can come back and figure out if it's done enough. Harker told us he thought the Fed was restrictive already. He didn't say sufficiently restrictive. That would be an incredibly dovish comment from Powell if he says it tomorrow, that we are at this point sufficiently restrictive. That would tell us that he thinks we're at the point where we can hold for a while. That's what Harker thinks. That's what Collins thinks. I think that's what Bostic thinks from Atlanta. So there is a contingent of, I guess you'd call it the we've done enough crowd.